everyone. So, all protocol observed. Now, coming directly to answer the question. So, first from Deobamla, right? There were two questions, as I understood. You can correct me if I have misunderstood. So, first was your question that how we are managing the interest on liabilities while it is increasing in case of other banks, it is not increasing at the same accelerated pace in our case. And the second question was that how is the investor sentiment so strong for Bob, which enabled Bob to perform 100+% as my colleague on the dais and CEO of USC, Mr. Paul, had alluded during his presentation. So, with regard to interest on liabilities, the first thing, as ED in his presentation alluded, we try to stick to basics. Banks are for lending, not for racing to attain any size, any particular number. No particular number in itself is important for us. It is for sticking to the basics, doing what banks are supposed to do. Banks are supposed to lend, and that's how we emphasize on lending. Lending for the productive purposes. So that is how we lend more for agro processing, for manufacturing, which creates lots of jobs, which impacts the wider sections of the population across the length and breadth of the country. It enables the country to produce not only for its own consumption but also for exports and earn the valuable foreign exchange. So, with those core philosophies continuing to be intact, since we are not racing against anyone, we are able to diversify our resource bases, and the people who are interested in this kind of contribution from the financial lender for the prosperity and the progress of the country. And that is what enables us to find out the adequate amount of resources which are required for lending at a very competitive prices. And we don't race against anyone if A is offering this percent or B is offering that percentage on deposits. That doesn't matter to us as long as we are able to secure resources very, very competitively. And that also enables us to lend at a very competitive rates, and that is how keep our assets very, very performing, as ED had alluded, 0.02% in absolute numbers, 342 billion shillings on a loan book of 1,651 billion shillings. So that is what makes us and enables us to keep the interest on liabilities on the lower side. Second question, with regard to what makes the investment sentiment for Bob so strong, is the collective wisdom of the board, collective dedication and in execution of the management strategies by the uh, whole staff, the whole team Baroda, and this is what is gets a big thumbs up from investors committee, because they find that yes, this is an institution which had been in the country for 73 years, since 1953, irrespective of the fact whether there was a good time and not so good time. And it, with such a resilience, they know that this is the institution which executes its strategies in the most productive manner for the most productive sectors of the country without involving or getting in a race against anyone. So, banking industry is my collaborator, not my competitor. And that is how we operate, and that is what gets a big thumbs up from the investor segment. I hope I have answered your questions adequately. Right? The second question, as I have jotted down from Ali Twaha from New Vision. regarding diversification. Yes, it's true that the dynamics of the market are changing, and many of the banks are diversifying into bank assurance, unit trust, and various other new products. We are examining, and all the time we are alert and agile to examine each and every possibility and opportunity that comes our way, and all these things we are vetting. But at the same time, when there is a productivity analysis, we see at what stage, how much resource, not only the financial but also in terms of human capital, is yielding what amount of productive yield per unit of efforts contribute. And that is where the moment it breaks even in our calculations, we will be there in those markets. Till then, our resources are channelized, as I mentioned earlier, towards the more productive segments and more productive market. I hope I have answered your question. Right?
Yeah.
Yeah. So the person from UBC, I just missed your name. Your question was regarding mortgage financing. So just to make things very simple, because we try to keep things simple at Baroda because we don't understand complicated things. So to keep things simple, it is not about mortgages or non-mortgages. It is about the purpose. What purpose the lending is required. Because if the purpose is the progress and prosperity of the country, is the purpose is to produce, the purpose is to add value, as the Honorable President, His Excellency Mr. Museveni keeps saying, that we need to talk about value addition. We just don't need to export raw materials from out of the country. We need to add value. So those are the purposes we keep looking in each and every proposal. Yes, mortgages offer a sense of security, safety, and we look at mortgages or the collateral securities or the prime securities in any particular proposal as a measure or one of the measure for the capacity of the person to execute what he is putting on the paper. Because someone may come and say, okay, you give me X amount and we will execute sales or revenue stream of Y amount. But whether they are so much capable of, so on those counts, we do look at the prime securities and the collateral securities. But the first prime mover is the purpose. Whether that purpose is doing any value addition, whether that purpose is producing, because unless you produce more, you are not adding to the progress and prosperity of the country, for the people behind the venture, and the whole lot of staff involved into doing that. And that is the prime mover for us. So as far as in general mortgages are concerned, yes, we do undertake all those kind of things. We have housing loan portfolio in our loan book, and we do look at mortgage-based loans for trading and all those sectors. But we remain very committed and very steadfast in our purpose, that what exactly is the purpose for doing the business. That's all. I think I have answered your question.
Mine was on what is the bank's idea behind retaining more and having more cash and balances than, for instance, investing in new ventures like my colleague said. What is the idea for the medium term and the long term for that approach?
So, yes, I think your idea is coming from the fact that we are highly capitalized. So, sometimes people do inquire that why Bank of Baroda is so highly capitalized why we are not investing more in various diverse sectors of the market. The answer is that it is a measure of, this is indicative of our efficiency levels. So we appear highly capitalized because whatever is we lend is a performing security, is a performing asset. Since we do not have NPAs, so we don't have to consume our capital for the purposes of provisioning or write-offs and all that. Second thing is, there is a law of the land which says that we can lend only up to 80% of our deposits. So indirectly, it enables or it asks us not to lend your capital funds, your retained earnings, which keep on accumulating every year. And that is where all these retained earnings which are getting accumulated every year, they keep showing our capital base rising or becoming more and more robust. But as per the law of the country, as the law abiding corporate citizen, we cannot lend capital, so we just invest it in government securities. And that's how it appears very highly capitalized. Our capital base is 33%, I think, at this point of time. So that's how it appears highly capitalized. Thank you.
Intelligence, diversifying their portfolios, sector-specific lending, low NPAs. These are things people look out for. The profitability, the growth. They are specific about how they run their business. They are aligned to the government 10-fold growth program. Building the nation and the sectors they invest in are aligned. So an investor would ultimately look at those particular areas and see where is the leadership going, and in terms of strategy, but also how is the business performing. If you look at the growth over the numbers they've shared, why wouldn't an investor not participate, and why wouldn't the returns? Because at the end of the day, an investor is looking for return. Is it a dividend paid out, or is it capital growth in terms of capital gains? So the sentiments are always positive for the companies that are performing, that are well run, and that always drives positive pricing within the market. And those that do not, again, investors will price them in the opposite direction. You'll see a drop in their performance on the exchange. In terms of your question on, in terms of your question on the bull market, I think I highlighted that the equities market is up 92% year on year. So we continue to see those sentiments within the market. Do we expect the same? If the first quarter has performed that well post-elections and results are coming in with these kinds of performances, we expect an even better Q2, because usually when there are dividends paid out and results, the market reacts to that information. So we do expect that 2026 should remain a bull market considering the environment. Geopolitics, yes, it does affect. If you did notice, the turnover had really increased until the recent Iran, US, and Israel, and the impact on the currency. That depreciation, we saw the foreign investors were coming in from Tanzania, Kenya, and South Africa kind of slowed down, because stability of the currency drives investment for foreign investors. So yes, there is an impact, but it really varies. We do have a lot of local investors too who participate, but the impact is really dependent on how far the currency depreciates. We do know that the central bank really plays a critical role in keeping a stable currency and stable macroeconomics. So overall, we think both in the bond market, even though we're seeing that interest rates are dropping, government is not as eager to pay highly, but investors need to put the money away. So the choice between equity investments, collective investment schemes, which we've seen grow, and the government bond market will continue to be vehicles of choice for investors, and they'll decide in which particular asset class they should put investment. So
with the bank. I have two questions. One, what explains the extremely low NPL ratio? I wanted to understand the statistics behind that, and also on the asset quality. What declined, because I saw there was a decline in other income from 18 billion to 8.8 billion. So what caused that? And are there any strategies on increasing the non-interest income? Yeah, thank you.
Mr. Shareholder, I have some comments, probably two questions. So what stood out for me is profit growing at 17% was faster than assets at 13%. It means you have very good asset utilization. Then costs barely grew by 1%, which is operational discipline. In a time of high inflation, it was fantastic. So my questions, one is a cautionary tale. So I saw, and you manage assets well. Loan growth was 11.6%, and it's slightly below deposit growth of 14, which suggests that liquidity is building up faster than deployment. And this could drag margins if we don't convert it into assets. My other question is on, I was passing by UBS sometime. I know banks have a court case with URA on treatment of bonds, I think earnings, interest. Yeah, I want to know the impact of that on our book. And now I'll say where I came. When Victor and when they sent me messages, I said I couldn't miss, I had to come. Because I know today is Mr. Sashida's last public event as our MD, and I'll recount our interactions. Yeah, as I say my thanks to him. So the first time I meet Mr. Deepak, he greeted me in Luganda. And for me that showed he wanted to get into the community he came into. And I can assure you, I meet many staff and they really liked that. You did so well. And yes, then a few months we had like some tense time because Bank of Uganda delayed our dividend, so I took on Bank of Uganda. And everybody told me that, Andrew, they are going to think I sent you, you know? But I told him I've been fighting Bank of Uganda for many years. Yeah, so I hope that, but it did, of course, we kept in touch. And in the subsequent meetings, I thought he was joking. He told me we're going to increase your dividend. Yeah? Because I would interact and I'll tell you he retired me from AGMs. If you noticed, I've not attended AGMs, I don't comment publicly. I last attended his first AGM only. And last year I didn't attend. Because he gave me what I wanted. Dividend doubled. Today it has gone up again 50%. And Wamala was asking about the share price. So Mr. Deepak came when dividend was 2 shillings. Actually, it was 1.7. Oh, Mr. Shashi, sorry. Yeah, he came when it was 2 shillings. He's leaving it at 6. He had actually told me, yeah, oh, you can clap. That's 200% return. That is why the price has moved from, he found the price at 13 or 12. Now it's 49, probably it's going to be 55 or 60. So, yes, I'm not a market manipulator. but thank you very much. The staff speak very highly of you, and we want that to continue. And also to transition to Mr. Deepak, the staff also say you're very kind and friendly, because I interact with staff in all branches almost when I'm traveling. So that is very good. And part of the thing is they have built now a culture of getting, and even under his tenure, we have seen more Ugandan managers of branches. Yeah, so that is a good one on him. Staff are trained, because me as a shareholder who used to talk, I no longer talk that much. My targets were I want a good dividend, I want directors to be paid well, And I wanted to see Ugandans in the top positions, and he has done it. It's still early days, but they are training them online. And yes, I will also ask, I know directors won't ask for more allowance because it looks weird. Please, our directors need more allowance. Please. Yeah. And I am very grateful that even if I have not been attending the AGMs, you're able to call me, we discuss staff welfare issues which you've worked on. Some is pending and your successor should like have them. I know Mr. Deepak will work on them. And on the lighter note, the last one, since Mr. Deepak is here with us for long, one staff told me that he looks like a Bollywood star. And you can see it. So thank you very much.
I think we'll take that elaborate question. Thank you for such a good remark. It motivates me further. So, just I'm taking the shareholders' question. Why NPA level is low? So, as my MD was deliberating the thing, just I want to emphasize that the actual thing is our business model. As MD was suggesting and explaining that we lend in the cash generating or value addition chain. If you see the supply chain process, we lend in the value addition thing. So that's how the thing is that cash is generating in that. Then only if you see the final product is any value addition is there, then that is the appetite for the bank. We are very aggressive for lending in that activity. So that is the one part. So we see the cash flow rather than security. Cash flow is one of the things. Under credit writing, underwriting, we see that. So that is one part. Second part is centralization of the credit decisions. So if across the branches, our decisions are centralized. It is not that one individual, suppose is reckless or anything, that is being managed and controlled, you can say. That is, yes, branches stakes are there, they are processing the things, but decisions, different committees are being taken. So our decisions are uniform. Part one is diversification of the portfolio. Even though we are in the aggressive in the manufacturing and agro processing thing, at the same time we diversify among the industry. We are not concentrated to any particular industry as on today. So that is the third point. And the fourth, which we explained, that trade monitoring. The trade monitoring system is that in that, and again it is a centralization at head office level. The team who is looking at the trade monitoring, they are not involved in the trade decisions process. So they are not having any conflict to hide anything, you can say. And we are proactive. Before taking account to be NPA 90 days, we even the 1 day, 2 days overdue, we see very minutely. And whatever the credit mitigants, whatever the recovery measures are required, that is being taken well in advance. That's how we are able to manage this portfolio of 1.6 trillion with 342 million NPA level. Hope I am able to answer your question.
Thank you, Deepak, and thank you, Andrew, for your remarks. So, just to supplement, he has answered the question. So, just to supplement that, when we say that credit decisions are centralized, what exactly we mean? Because it may give a connotation that everything markets have taught us, that the markets are always supreme over and above any particular individual. And markets are supreme because they represent the collective wisdom. So the same thing we have implemented in underwriting our credit. So like ED had alluded, that there is a committee approach. Then the second part is that we have tried to address the issue of conflict of interest. So in certain places you would hear that there would be people who are after achieving their individual target for the branch or something like that. Somebody may have an additional conflict of interest because his bonus or some performance appraisal might be depending upon that achievement of target. So this makes the position of that particular person vulnerable or susceptible to the charms of doing something. This we have addressed by creating a system where branches will provide the processing part, and then there would be a committee which will have a relook, revisit the whole proposal, and then it would be first go through the management committee, and if it falls in the powers of the board, then board audit committee shall look into it, and then it will get sanctioned. That is what exactly explains our asset quality and the low NPA ratio. Charles had also spoken about the other income. That other income is not appearing to be rising faster as it was earlier. So, because of the IFRS provisions, that the whole lot of other income has to be spread over to the residual tenor of the guarantees or the LCs, whatever those things are. And that's how our other income, though it is getting booked very heavily, as ED had alluded that we have done very, very well in terms of canvassing non-fund based business, but that income is not fully visible and fully booked into the current year's profit. It will keep flowing in, and that in a way is very good, because that is what enables us to say, sitting on 31st March 2026, that we will do what we have promised on 31st March 2026, because we know that pipeline, we know that all this income is going to flow in, and no doubt about it, right? And you had alluded to two things. One, director's allowance, and the other one, you are interest on government securities. So which one you want to hear first? Okay. So you would remember when we had met in Muniano in 2024, which was my second AGM. You had mentioned, if I remember the figures correctly, that our payment to directors, you had seen in the annual report, had increased from close to 50 million shillings to 78 million shillings that year. I'm not remembering the last year's figure, but I'm very sure it is going to be 100 million plus. So you will be happier than what you were in Muniana. Now coming to URA interest on government securities. So there are very meticulous engagements going on between the industry, the URA, and under the chairpersonship of Bank of Uganda. So all the stakeholders, because Bank of Uganda is the central agency which conducts all the auctions for the government paper. Industry is one of the biggest investor, and then URA is someone who we feel has got some misunderstanding by looking at the profit statements or the profit and loss accounts of certain banks. But I think we are submitting our viewpoints or the facts behind the figures, and I'm sure the wise sense will prevail. And when such wise persons at the highest level are discussing the things, and you wanted to know the impact. So impact depends on what way the thing is seen. If you ask me that I have, like TB had mentioned, that I have interest from government securities around 132 billion, 132 billion shillings. So if you ask me that, okay, instead of this being charged as a final tax at the rate of 20% or something, in addition to that, if it is to be done by 30%, so the impact comes to around 13 billion. But then there are various other nuances like what expenses to be disallowed or etc., and that impacts the calculation. So it will, while so much engagement is happening at the industry level, I think giving any particular number is not appropriate at this moment. And
You can set up frontier serials and conclude them. Right. I don't know how we conduct this.